Hello guys. Now last time we discussed a different trading strategy consisting of the parabolic stop and reversal along with the average true range indicator and a few others. This time we'll try something new, and it is another one of our tried and tested setups consisting of exponential moving averages and the super trend indicators. The time frame on which we'll be using this is 15 minutes, and the charts which we'll be following is the standard Japanese candlesticks. Now, basically, the setup consists of three exponential moving averages with periods 6, 12, and 24, and two super trends with the settings 12 and 2.5, along with 8 and 3. Now, the rules for entry are simple. For a long position is to be initiated when the 6 exponential moving average crosses over and above the 12 and 24 moving averages, with both the super trends being green and under the price. The inverse holds true for short positions. 6 exponential moving averages coming down and under the 12 and 24 moving averages, with both the super trends being red and above the price. Now, the reason for which we have selected 6, 12 and 24 is 6 is a shorter period and it gives a better idea of the price and in which direction it is going to move, but it also provides a lot of whipsaws or fake entries. To eradicate that, we have combined it with 12 and 24 exponential moving averages. Now, super trend, as we discussed earlier as well in the PSAR video, is basically derived from ATR or average true range indicator. Now, the good thing about super trend is that it sends out accurate signals at the right time of entry or the precise time. It is generally available on most trading platforms, and it is a very good indicator for short-term technical analysis in a trending market like ours. It also works in range-bound markets, albeit not as good, which is why we have combined it with 6, 12 and 24 exponential moving averages. Now let us go ahead and see the same setup on a couple of charts to get a better understanding of how the positions are to be taken. Keep in mind that as per this setup, only intraday trades are to be taken, as we are following the 15 minutes time frame, and no positional trades are to be initiated on this. Now, we can use a smaller time frame chart as well, but that may or may not be as accurate, as we have back tested this only on a 15 minutes chart, and we strictly recommend a 15-minute chart time frame only. Now let us discuss Maruti just for an example. Now the chart time frame is 15 minutes. The indicators have been applied. Super trend 12, 2.5, 8, 3. Exponential moving averages 6, 12 and 24. Now as per the rules we discussed, a short position is to be taken. Let us see. Over here, the red moving average is the 6 exponential moving average. The blue and the black are 12 and 24 respectively. Now, as per the rules we saw earlier, a short position is to be taken when the red or the 6 exponential moving average comes down and under the 12 and 24 moving average, along with both the super trends being above the price and red in color, right? So, over here in this candle, right over here, the 6 exponential moving averages crosses down and under the 12 and 24. So right over here we have our first confirmation for entry. But now we wait for both the super trend indicators to go above the price range. As we can see, they shifted right at this candle. So at the beginning of the very next candle, or in the beginning of the same candle, we are to initiate a short position. Now you can see we would have initiated a short position at just a minute. At this level 7172, and then the price went on to make a low of 7063, resulted in a gain of, should I say, almost 100 points, which is rather good for an intraday trade. Now let us see a few more entries right over here in the beginning of the day itself. Now here we see that the super trend came below the price first, which is another confirmation for entry for a long position. But the 6 moving average had not crossed above and over the 12 and 24 moving averages. So we waited for a confirmation of our entry, and we would have entered right over here. Let me check the price level again. We would have entered around 7014 approximately, and then we could have either trailed our stop loss or booked strictly at 1%. Now the risk to reward ratio to be followed in this strategy is strictly 1:2. 1% is the ideal target for intraday trades, with 0.5% being the stop loss. Now many people also use just the moving average crossover strategy, but the reason is we have applied or added Supertrend over and above the moving average setup is because sometimes just the moving average crossover may or may not give a proper entry. The script may go sideways or it may hit your stop loss. But with two confirmation of entries, we have a higher accuracy rate. Let us have a look at TCS. Right over here, the 6 moving average crossed above and over the 12 and 24 moving averages. At the same time, both our super trends came below the price, and it was an immediate confirmation for a long position. Now, as we can see, the entire day it remained on a good and strong uptrend, resulted in a gain of over 2%, a very good trade. Now, we can see right over here, a new trade is in the making. The 6 moving average can be seen coming down. One super trend is already above the price range. The second one almost there. So this is one stock to keep an eye on now. Let me see. This is a classic example of a wrong entry. If we were using just the EMA crossover strategy, over here we can see the 6 exponential moving average. Although it crossed under the 12 and 24 moving average, the stock did not give much of a move. Now, as per our strategy, we had one entry confirmation, but we are still waiting for the second entry confirmation, which is both the super trends to be above the price and to be in red. But one super trend did not go, and hence we would not have entered over here. But if someone was using just the exponential moving average crossover strategy, they would have taken entry over here. Now, this could have been a scalping trade, but it is rather risky, and the stock went sideways throughout the entire day. So the more the confirmations you have in your setup, the less likely you are to take false trades, or simply put, the higher your accuracy rate, the more stringent your system is for generating entries. Now we have seen 3 charts for this system. We have been using this system extensively since months, if not weeks, and it has proven to be very beneficial and highly accurate for us. We ask you to backtest it yourself and understand the working of this system thoroughly before applying it in the live market. And if you have any doubts regarding the system, or if you have any misunderstanding or conceptual doubts regarding any charts whatsoever, you may feel free, or please do feel free to reach us out at our support account on Telegram as well. Thank you guys. We'll be coming soon with a lot more strategies and a lot more other productive content for you.